Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. To many people's surprise, Warren Buffett bought 60 million shares of TSMC stock, which is worth almost $5 billion now. Taiwan Semiconductor Manufacturing Company, or TSMC, is the largest pure-play contract chip maker in the world. This makes TSMC stock one of Warren Buffett's top 10 holdings in his $300 billion plus stock portfolio. Warren Buffett is the most successful value investor in the world. He likes to invest in outstanding businesses when they become undervalued. He likes to invest in stocks when the market is very fearful, because most stocks will become undervalued. For example, at the time of making this video, the entire semiconductor industry is in a large bear market. The iShares Semiconductor ETF is still down more than 30% from the most recent peak, and TSMC stock is still down 42% from the most recent peak, even after Warren Buffett bought 60 million shares of TSMC. In this video, I'm going to talk about why Warren Buffett bought TSMC stock and whether TSMC is still undervalued now. You will learn about these topics. Why did Warren Buffett invest in TSMC stock? TSMC's economic moat and long-term business prospects. TSMC's biggest risk you should know. TSMC stock valuation, and will I buy TSMC stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent investing videos a week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we will be able to stay independent and create many excellent stock analysis and investing videos a week that will help you become a great investor. The link is in the video description. Take a look, let's start. So why did Warren Buffett invest in TSMC stock? Buffett likes to invest in wonderful businesses at wonderful prices. Contrary to what most people believe, Warren Buffett is not a stock picker. He's a business picker. When he invests in stocks the same way he buys businesses. He explained his investment strategy in a recent shareholder letter. Whatever our form of ownership, our goal is to have meaningful investments in businesses with both durable economic advantage and a first-class CEO. Please note particularly that we own stocks based up on our expectations about their long-term business performance, and not because we view them as vehicles for tiny market moves. That point is crucial. Charlie and I are not stock pickers, we are business pickers. I make many mistakes. Consequently, our extensive collection of businesses includes some enterprises that have truly extraordinary economics, many others that enjoy good economic characteristics, and a few that are marginal. One advantage of our common stock segment is that on occasion, it becomes easy to buy pieces of wonderful businesses at wonderful prices. That shooting fish in a barrel experience is very rare in negotiated transactions and never occurs en masse. It's also far easier to exit from a mistake when it has been made in the marketable arena. When Warren Buffett invests in stocks or buys businesses, he looks for 3 main characteristics. In my opinion, I believe TSMC has all 3 main characteristics. The first characteristic is that the business needs to have outstanding management, or what Buffett calls a first-class CEO. This is the most important characteristic of an outstanding business, because outstanding management or a first-class CEO can help the company turn around and help the company become the market leader in its industry. Also, if the company has the right management, the business will become very profitable and very competitive over time. It will have increasing revenues, increasing earnings per share, increasing free cash flows, and a large economic moat over time. For example, under TSMC's current management, TSMC has become the largest pure-play contract chip maker in the world. According to the latest data here, TSMC has over 50% of the market share in the global semiconductor foundry market. All the major companies such as Apple, Broadcom, Qualcomm, Nvidia, and AMD rely on TSMC to make their chips. Samsung Foundry, the second largest foundry in the world, is still far behind TSMC in terms of foundry market share. The second main characteristic is that the business must have certain competitive advantage or an economic moat that cannot be easily copied by competitors. The competitive advantage can be branding or economies of scale or a patent or an ecosystem or a network effect. For example, TSMC has one of the largest economic moats in the semiconductor industry. TSMC has the most leading-edge process node technologies such as 5nm and 3nm process nodes. TSMC also has the most advanced semiconductor fabrication plants that cannot be easily copied by competitors. The third main characteristic is that the business needs to be at a price that is fairly valued or better undervalued with a good margin of safety. For example, since TSMC stock has dropped as much as 42% from the most recent peak, mainly because of the geopolitical risk between China and Taiwan, it's very likely that TSMC is undervalued now. I believe this is one of the main reasons that Buffett decided to invest in TSMC. Buffett also likes to invest in businesses that have a strong balance sheet with strong financials, not businesses that are not profitable yet. He likes businesses that have high return on invested capital, consistent revenue growth, consistent operating income growth, consistent free cash flow growth, consistent dividend growth, and a high operating margin. For example, if you look at TSMC's latest Q3 financials here, you can see TSMC had a very high 60% gross margin and a very high 51% operating margin. TSMC has the highest operating margin in the global foundry market compared to other competitors. Also in the past 10 years, you can see TSMC had very consistent revenue growth, consistent operating income growth, consistent earnings per share growth, fairly consistent free cash flow per share growth, and consistent dividend growth. Obviously, when it comes to investing, the rear view mirror is always more clear than the windshield. More importantly, we have to be forward-looking instead of backward-looking when it comes to investing. So let's talk about TSMC's economic moat first before we talk about TSMC's long-term business prospects. I believe TSMC has one of the largest economic moats in the semiconductor industry. For example, TSMC has the most leading-edge chip-making processes such as the N5 process node and the upcoming N3 process node. Also, TSMC has very large economies of scale compared to competitors. Based on the number of chips TSMC makes every quarter, TSMC has over 50% of the global semiconductor foundry market. More importantly, TSMC makes more than 90% of the leading-edge chips. According to this article here, TSMC accounts for an estimated 90% of the world's super advanced computer chips, supplying tech giants including Apple and Qualcomm. TSMC has a much larger chip-making capacity compared to other competitors such as Samsung and Intel. As I mentioned earlier, TSMC's operating margin is much higher than Samsung and Intel's because of TSMC's cost savings from its economies of scale. In my opinion, it's extremely hard for competitors to pass TSMC's node technologies and have the same manufacturing capacity as TSMC. This is because running a semiconductor foundry business is very capital intensive. Companies that try to build leading-edge chip foundries need to invest billions in R&D and billions in semiconductor fabrication plants, also known as fabs, every year. For example, each semiconductor fab that can make 5nm chips can easily cost between 10 billion and 20 billion. Each EUV lithography system can easily cost between 150 million and 300 million. Very few companies in the world can afford to build their semiconductor fabs and buy their own EUV lithography machines. That is why most semiconductor companies such as Nvidia, AMD, Broadcom, and Qualcomm have become fabless. This means there are many chip designers. They do not own their fabs. They outsource chip making to TSMC, Samsung Foundry, Global Foundries, and other foundries. According to this article here, in 2021, you can see TSMC's largest customers were Apple, MediaTek, AMD, Qualcomm, Broadcom, and Nvidia. Apple accounted for 26% of TSMC's total revenues in 2021. Apple pays billions to TSMC every year to use TSMC's most leading-edge process nodes, such as the N5 node and the N3 nodes, before all other customers. Another example is this. It shows TSMC's biggest competitive advantage and economic moat. According to this article, TSMC is expected to charge around $20,000 per wafer for the N3 node. This is much higher than the last gen N5 node, which costs around $16,000 per wafer. Let's talk about TSMC's long-term business prospects. At the time of making this video, the entire semiconductor industry is in a large correction. There are several reasons for this correction. First, the semiconductor industry is very cyclical. During the pandemic, there was a large demand for PCs, laptops, TVs, gaming consoles, computer components such as GPUs and CPUs, and other electronic devices because everyone had to stay at home and work from home. The demand for PCs, laptops, and chips were pulled forward. During this time, many semiconductor companies such as Nvidia and AMD ordered too much inventory and chips to meet demand. They made a mistake and thought the demand would continue after the pandemic is over. Now, many countries around the world are heading into a recession because of high inflation and high interest rates around the world. Central banks around the world, including the US and many European countries, are increasing interest rates and tightening their monetary policies to fight inflation. At the same time, consumers are starting to cut back their spending on non-essential items such as PCs, laptops, CPUs, GPUs, TVs, and the latest smartphones. Also, the cryptocurrency market has crashed. As a result, the demand for high-performance GPUs and CPUs has dropped substantially. In recent quarterly earnings, you may notice that many semiconductor companies such as Nvidia, AMD, and even Intel are adjusting and writing off their inventories. This is because these companies have too much inventory, and because the demand for PCs and smartphones has slowed down a lot in recent months. This is why many semiconductor companies such as Nvidia, AMD, and Intel are reporting much lower earnings and much lower guidance in recent quarters. Over the next several quarters, I believe many companies will likely need to lower their orders from TSMC until the economy gets better with much lower inflation and until the demand and supply for chips become more balanced. This means TSMC's revenue growth will likely be a lot lower over the next several quarters until the second half of 2023. TSMC management said this in a recent earnings call. It explains TSMC's growth prospects over the next several quarters throughout 2023.
On the demand side, we continue to observe softness in consumer end market segment. Other end market segments such as data center and automotive related remain steady for now for TSMC, but we start to see the possibility of adjustment down the road. On the inventory side, our customers and the supply chain continue to take action to adjust their inventory. We expect the semiconductor supply chain inventory to peak in third quarter this year and start to reduce in fourth quarter this year. We also expect it will take a few quarters through first half 2023 to rebalance to a healthier level.
Here's the important part. Management believes that TSMC will still have an overall growth year in 2023 because the demand for TSMC's N5 and N3 processors is still strong. But obviously, TSMC's 2023 revenue growth will not be as high as before because the demand for PCs and smartphones has decreased a lot in recent months.
Looking ahead to 2023, with the successful ramp-up of N5, N4P, N4X, and the upcoming ramp of N3, we will continue to expand our customer product portfolio and increase our addressable market. Thus, while the ongoing semiconductor inventory correction will affect our first half 2023 utilization rate, we expect our business to be supported by stronger demand for our differentiated and leading advanced and specialty technologies, and for 2023 to be a growth year for TSMC. Now, I will talk about our N3 and N3E status. Our N3 is on track for volume production later this quarter with good yield. We expect a smooth ramp in 2023, driven by both HPC and smartphone applications. Our customers' demand for N3 exceed our ability to supply, partially due to the ongoing tool delivery issues, and we expect N3 to be fully utilized in 2023. We expect N3 revenue in 2023 to be higher than N5 revenue in its first year in 2020, and for N3 to contribute a mid-single-digit percentage of our wafer revenue in 2023, as our overall revenue base is much larger today than in 2020. N3E will further extend our N3 family with enhanced performance, power, and yield, and offer complete platform support for both smartphone and HPC applications. N3E development is progressing ahead of plan, and volume production is now scheduled for second half 2023.
In terms of long-term growth beyond 2023, management expects that TSMC's revenue will grow at a compound annual growth rate CAGR of 15% to 20% over the next several years, driven by TSMC's upcoming N3 and N2 nodes. Management said this:
by working closely with our customer on technology development, our N3 and N2 will deliver full node strides in performance and power benefits, while offering the industry's most advanced transistor scaling. We expect strong demand for our leading node technologies, driven by both smartphone and HPC applications, to fuel our long-term revenue growth of 15% to 20% CAGR over the next several years in US dollar terms.
According to management, in terms of future roadmap, TSMC's upcoming N3 node is on track for volume production with good yield later this quarter in 2022. And TSMC's even more advanced N2 node is expected to enter volume production in 2025. TSMC's leading-edge node processes are used to make chips for 5G smartphones, data centers, high-performance GPUs, CPUs, autonomous driving vehicles, robotics, AI applications, and many other high-performance computing HPC applications. In the recent quarter here, high-performance computing, HPC, and smartphone platforms contributed the most revenues for TSMC. In the upcoming years, I believe high-performance computing, HPC, Internet of Things, and automotive platforms will be the biggest growth drivers for TSMC going forward, because there's a large demand for these platforms that demand much more powerful chips that are more energy efficient. For example, even in this high inflation market, there is still a large demand for high-performance GPUs for AI applications, high-performance CPUs and GPUs for data centers, and high-performance processors for autonomous driving vehicles. Also, the semiconductor industry is expected to become a $1 trillion industry by the end of 2030. In my opinion, this trend will benefit TSMC in the long run. Here is another example. This article is from Electric. Tesla is expected to become one of TSMC's largest customers. Tesla is expected to use TSMC's N5 or N4 processors to make chips for the next-gen full self-driving FSD service. So what is TSMC's biggest risk? TSMC's biggest risk is the geopolitical risk between China and Taiwan. This is only my opinion. Based on my understanding, if China takes over Taiwan, it will have a huge impact around the world, especially in the semiconductor supply chain, because TSMC controls over 50% of the global semiconductor foundry market. More importantly, TSMC makes around 90% of the most advanced chips in the world. If China takes over Taiwan, China will likely achieve chip sovereignty and become the chip-making leader in the world, because TSMC's most important fabs that have the most leading-edge node technologies are in Taiwan. Obviously, the US does not want this scenario to happen, because it will disrupt the entire semiconductor supply chain, affect many US companies such as Apple, and affect the global economy. More importantly, the US wants to become the chip-making leader instead. This is why the US has been enforcing more chip sanctions on China in recent years. To reduce geopolitical risk, TSMC is building the most advanced fabs that can make 5nm and 3nm chips in Phoenix, Arizona. In my opinion, I think it's too early to tell how these chip sanctions on China will impact TSMC going forward. Chip sanctions will certainly affect many semiconductor companies such as Nvidia that sell many high-performance computing products to China. If China takes over Taiwan, I believe the US and many European countries will impose more chip sanctions on China, such as preventing China from buying any lithography systems from ASML and preventing China from buying any chip-making machines from Lam Research and Applied Materials. This from Bloomberg. Chin-Ming Tong, Director General of Taiwan's National Security Bureau, told lawmakers on Wednesday that it would be useless to take over facilities from TSMC if Beijing took control of the island. TSMC is highly integrated with the global supply chain, including suppliers such as ASML Holding of the Netherlands, so the US and other countries will be able to choke off its production without getting rid of its plants. TSMC needs to integrate global elements before producing high-end chips. Without components or equipment like ASML's lithography equipment, without any key components, there's no way TSMC can continue its production. Even if China got a hold of the golden hand, it won't be able to lay golden eggs. I want to show you how to calculate TSMC's intrinsic value here, so you will know when TSMC stock becomes undervalued, fairly valued, or overvalued. If you want this calculator, you can download it from my Patreon blog in the video description. These are the key assumptions in this calculator. First, I define TSMC's intrinsic value as its future free cash flows discounted to the present day. The discount rate is 11%. You can use a higher discount rate here if you want to be more conservative. TSMC's most recent trailing 12 months of free cash flow is $17 billion US. I have to convert TSMC's free cash flows from Taiwan dollars to US dollars here. Based on the short-term headwinds and the long-term business prospects I talked about earlier, I believe TSMC's free cash flow will stay flat or increase slightly in 2023. Then I believe TSMC's free cash flow will grow at a compound annual growth rate between 15% and 20% over the next several years. TSMC management expects that TSMC will still have a growth year in 2023. TSMC management also expects that TSMC's long-term revenue growth will be 15% to 20% CAGR over the next several years in US dollars. Let's go over these 3 case scenarios here: worst case, normal case, and best case scenarios. Under the worst case scenario, we're assuming TSMC's free cash flow will decrease by 5% in 2023. After that, we're forecasting its free cash flow will grow at a compound annual growth rate CAGR of 15% over the next several years. If we forecast TSMC's free cash flow over the next 5 years and discount the free cash flow to the present day, TSMC's intrinsic value should be around $546 billion for the entire company, or $105 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're assuming TSMC's free cash flow will stay flat in 2023. After that, we're forecasting its free cash flow will grow at a CAGR of 17.5%. Then TSMC's intrinsic value should be around $620 billion for the entire company, or $120 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're assuming TSMC's free cash flow will grow 5% in 2023. After that, we're forecasting its free cash flow will grow at a CAGR of 20%. Then TSMC's intrinsic value should be around $702 billion for the entire company, or $135 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, TSMC's intrinsic value should be around $120 per share. In comparison, Morningstar estimated TSMC's intrinsic value to be much higher, $133 per share. This means I believe TSMC is substantially undervalued at the time of making this video. I believe this is one of the main reasons Warren Buffett decided to invest in TSMC. So will I buy TSMC stock? Yes, I will continue to buy more TSMC shares going forward because I like TSMC's management, its long-term growth prospects, and its very large economic moat in the semiconductor industry. I already have TSMC stock in one of my growth stock portfolios here. TSMC and ASML are 2 of my favorite businesses in the semiconductor industry. This is only my opinion and it's not advice. I'm essentially betting that China will not take over Taiwan because the US will impose even more sanctions on China, such as preventing many US companies from selling chip-making tools to China and preventing ASML from selling any lithography systems to China. Now, all these are only my opinions and my analysis based on my research. They are not financial advice. There are always risks associated with investing. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.